welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to TRI's weekly what do we call this? The Broiler Chicken Show, but been suggested that we should probably lose that name. Try and be a little bit more topic specific. Get these viewers up here. But anyway, welcome back to the frivolity. I don't know whether I have, as you can, actually, let's see if I can show it over here. That's my email, though. You probably don't need to see that. As you can tell, I've been on vacation for the past week. Kind of out of it, really, to be honest with you. I didn't even, in fact, I specifically turned all social media off, turned all of those references off, just to make sure that I got a little bit of a disconnect, a little bit of R&R there, which I think is healthy. Always a good idea to do that every once in a while. I wasn't really watching the market that closely, and of course when I did turn the computer back on and looked at the old Bitcoin, noticed, gee whiz, what a rally. So what I really want to do is make sure that I can see you guys over there on YouTube. That's why I'm looking over here. I have the YouTube tab on the screen over here. So anyway, as I said, took a week off, which is probably needed. Like I said, every once in a while, just to refresh. So my apologies if you were sending messages and stuff my way. I wasn't. I literally, in fact, I even Chris was sending me messages and stuff, and I didn't even have the Discord open or any of those kind of chat things. So if you were reaching out, if you were looking for some sort of feedback or something from me, well, I'm back. I took the break, and if anything, it was really nice. Completely disconnected and just completely vegetated. Got about like 10, 12 hours of sleep a day, which I don't know whether I've told you guys, I love to sleep. That's one of my favorite vocations. That's probably why, I went all blurry there. But that's probably why I'm 50 years old, and actually I still look relatively young, still have a bit of hair on the top of my head. And I always go to my hairdresser, although, gee whiz, that bald spat's getting bigger by the day, eh? But I always go to my hairdresser, and she's always like, you have no gray. It's so bizarre. You're so old. But actually, you can see a bit of gray's coming in now. So anyway, the point of the matter here is we're back in the saddle. You like the goatee, eh? Chris even mentioned that. I didn't even think twice about it. And so, I'm supposed to talk about trading and Bitcoin and markets and stuff, so I won't get into chit-chatty because I end up wasting tons of time and getting down votes and all that kind of crap. So let's stick with the program. Today specifically, I would like to, and of course, unfortunately, I did start about an hour late because it takes a while to get back into the groove. And Chris and I worked a while on the newsletter document, trying to word what we sort of saw happening, and I wasn't here, so I didn't really have that close of a ear to the ground with what was happening over the past week. So my apologies, we're actually starting a little bit late. As you all know, the purpose of these Sunday shows is supposed to be sort of part market overview, part speaking to the current school term students, just in case they had any extra questions or needed more input from old man Beamish or anything, to try and help explain some of the concepts that we teach in the level one. Really, all levels of the school program. I don't have a problem if you have questions about it. You can always ask. And then finally, a little bit of a AMA session for both site members and even you guys over there on YouTube. Looks like we got a few people watching the video here today, so that's kind of cool. about what the heck we see going on in capital markets. Of course, I think probably if there was going to be a theme for today, and Chris, this is probably this we were sort of humming and hawing about how we might do this, and I did say that we did up a sort of draft of the newsletter. And I think on balance, this is what I want to talk to you guys about today. So I don't see anything really out of the ordinary here. Nice and simple, just keep it simple, stupid kind of thing. But we also might add in a point or two. And if anything, if there was going to be a theme for today's broadcast or even this past week, especially with what you saw out of Bitcoin, and if you have your journals out, which hopefully all 30 of you over there on social media do, and thank you very much for popping in, tuning in, especially people after hours who watch this later on. Of course, if you like anything that you see, you get any value out of this, please hit the like button, subscribe, get Google thinking positively of us. I'll try and not swear so much today. But I think if there was going to be a theme for today, I think the theme is strong opinions loosely held. I'm even going to type that into the loose. How do you spell loose? Her name was Lucy, but they all called her Loose. Who can tell me what group that's from? Who used to say that? That was a funny line from back in my high school days. Yeah, her name was Lucy, but they all called her Loose. No. Hey, David says, looks like the week off did you some good. Not so salty. Anyway, the point being that if anything, all you aspiring traders, this is the number one reason why we teach you that you are never, ever, ever in our education programs and just even chatting in our lounge and stuff, you are never going to be right 100% of the time. Just get used to it. It's just not going to happen. And this actually is where most people in social media, and especially new to crypto and stuff, this is where they fail, is they don't understand that the market 90% of the time couldn't give a rat's ass about your opinion. It just doesn't matter. And the irony of it all is that trading is this funny game where if too many people hold the same opinion, then that means that too many people in the marketplace, because the marketplace only has so many participants, too many people are on one side of the trade. And what ironically enough ends up happening is if you get a whole bunch of people that are uber ridiculous bullish, probably market's going to go down. You get a whole bunch of people that are uber bearish, market's probably going to go up. And then, so there is that component to this. Don't ever put and I even saw somebody, when I came back yesterday, I guess Friday evening, I sort of officially said hi to the gang and stuff. But I came back Friday evening and was just reviewing some of the videos. I don't know whether you watched Chris's video on Friday. That was a really good summary. He's getting really good at his craft. So thank you very much for everybody who did all of the various different videos and stuff through the week while I was gone. Appreciate it. But I even saw somebody when Julian was doing his video, somebody was like, well, you were bearish. Now the market's going up. Now all of a sudden you're bullish. Like, what the fuck? And it's like, well, get used to it. That's a trader's life. I mean, I talked to you guys quite a bit about one gentleman that I think very, very highly of in the marketplace, Stanley Druckenmiller. And he often talks, and if you ever read any of the Market Wizards books and stuff, he often talks about how, 1 week he could be uber bearish of something and have a huge short bet. And then all of a sudden something changes and just like that, oh, actually I'm bullish now. And it's like, well, what the hell? I thought you were bearish. No. But that's a trader's life. And if anything, my job is to try and tell you guys what a trader's life is really like, because I've been doing this silly game for 35 bloody years. I mean, I found it hilarious. You go through like win streaks, lose streaks. I went through a losing streak there in the winter, and some clown was like, "You don't know how to trade. You suck. You don't know what you're doing." And it was like, yeah, I guess you're right. I might as well retire. And I've been waiting for this moment where basically I believe that I was brought into this space by my beloved wife and spirit, because they really thought that there was an opportunity for me to try and help a lot of people in this world. And I think I have. And I think a lot of the feedback that I get, on my break, of course, I did lots of sort of spiritual exploration. And, one theme I kept hearing over and over is, if you can touch one soul and make a positive difference in their life with no expectation for any kind of, remuneration or payment or anything, but you just go out and you, I don't know whether you want to use the word love, but, obviously a lot of the spiritual people, they use that word a lot. I mean, do I love all you guys? In fact, actually, I remember there was one gentleman on this site who I really thought highly of. I told him that I loved him, and actually it turned out to be completely backfired in my face, and he got all freaked out about that. Not like, a butt fudging love, but, just love for one human to another. And that kind of backfired, so I don't really want to use that term. But if I can reach out to you, and I'm not going to be right 100% of the time, that's for damn sure. In fact, in the best of times, I try to be right somewhere around 60 to 70% of the time. If I can actually look at the averages down the column and see that kind of accuracy, then actually I'm super, super happy. So I know that there's a lot of people that are looking for that guru that is just always right and is just, just do what they say, and you will absolutely guaranteed to, get the hottest chicks, get the big bling bling, to get the fancy cars, all the gold watches and all that crap stuff. I don't know whether I'm really that person, to be honest with you. Yeah, that's right, Gills. You got to be really careful with that word. It's a tough word. Yeah, you're absolutely right. Anyway, so the point of the matter here is that I'm just going to keep on just trying to just make a positive difference in this world. That's all I can do. That is all I can do. And just trade my own accounts. I mean, my own accounts are perfectly healthy. I certainly don't have to worry about getting evicted or paying bills or paying the tax man or anything like that. I've been extremely blessed. I do get a little bit salty, but I think, probably somebody just said there a few minutes ago, probably best, Brian, take a break every once in a while. Try and lose a bit of the saltiness. But if anything, this past week, what I'm trying to get to with all of this is that this past week, I think, is an excellent analogy where if you really fancy yourself a trader, and I don't know whether you do or you don't, maybe you're just sort of watching this as edutainment. And what's worse is, don't tune into this kind of broadcast. And this is my advice for all of you out there in social media land. And the great part about it is, when I make this kind of advice, this is financial advice, quote unquote. Don't do stupid things in the market. That's my financial advice for you. I got 2 rules to play this game. Number 1, try and use some sort of algorithmic approach. If this and that 3 reasons for taking a trade, then you do that, or you do, if then else, right? If you get to the else part because you haven't got the 3 ifs, then you don't do anything. And if you can get that algorithm about 2/3 accurate, then you're made in the shade. Of course, getting to that point is extremely difficult for people. Not going to sugarcoat it. And the interesting thing is that a setup that might work for me, and I see 30, 40%, well, 60, 70%, 30, 40%. But if I see 60, 70% accuracy on the setups that I use, the irony of it all is it might not even work for you because it's just not your personality. And you might have to spend the time going through all of the various different tools in the candy store. And keep in mind, candy store is absolutely huge, to get to the point where you actually see the 3 reasons that you really like to use to justify you acting in the marketplace. So advice, right? 2 rules of investing. And then of course, rule number 2, which everybody hates, but I was a full service retail stockbroker, full service retail options broker, derivatives broker, futures broker, futures. I was a prop futures trader. I've done everything in this business. Don't risk more than 5% of what you've got to work with on any one idea. Just don't do it. So yeah, if you can follow those rules, if anything, if you can actually follow those 2 rules of investing, then it's actually difficult to lose money over the long term. But I don't know whether even the audience watching this video can even do that. It's not an easy place to get to. Keep in mind, like 90, 95% of the public cannot do this job. So those are the kind of things, unfortunately, that don't really score a lot of, hey, I got to follow this guy. He's going to make me rich. But if I was going to give advice and not worry about regulators jumping on me about actual advice given, because remember, we're supposed to be not financial advice, do your own due diligence, consult your financial advisor as to the appropriateness of this investment idea given your personal circumstances, blah, 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 blah. I can tell you without a shadow of a doubt, I have no problem standing in front of any judge or any jury, spitting out those 2 rules of investing and calling it advice. Because that's what I used to do with my retail client base, and I've done it with my own personal assets. I'm very comfortable. I don't have to, like I said, I don't have any financial worries. If anything, what I want to see is I want to see TRI prosper. And we have a whole family of employees now here, and I'd like to see them do well. And that's actually what really stresses me out, which is actually a really interesting thing, because it's gotten to the point now where I don't even really think about myself. What stresses me out is the thought of letting down other people and not being the support that other people need, and not being able, like if somebody comes to me and says, Brian, I trust you. I want to work with you. I see a job that you need doing. Let me help you fulfill it. And then, the revenue just isn't there to be able to justify them being on staff. Those are the kind of things that really, really stress me out. And if you hear me getting salty, it's that like literally I have a family of people here that I'm responsible to, and we got to make sure that these people can continue to have food in their mouths. Anyway, okay, so strong opinions loosely held, I think that's the theme of today. When Chris and I were going through sort of what happened over the past week, clearly this was, as I said, a strong opinions loosely held past week. The market message that I had, although I don't know, how do I move this over, Chris? I thought, actually maybe, there we go. Yeah. Okay. So, first things first, and, keep in mind, you can get this newsletter in your email. All you got to do is just pop on over to this URL. You can see it's even linkable right there, and you can have it delivered to you in your email. And of course, it's got the link to this video, so that can make it really easy for you to sort of follow along. Every week, I sort of like to think about a few sort of what happened. Of course, like I said, I was away this past week, so I didn't really have a total ear to the ground. But just doing some review overnight and then talking with Chris this morning, what are some of the ideas that we sort of ran into? Yeah, I'll put that over there. Did see, of course, that things like the stock market were just booming higher there before I left. But as you can see, stock market's taking a bit of a pause. This is the NASDAQ. We actually banged into a couple pretty important what would you call this? There's a specific name for it. Mystic. Oh, damn it. Can't remember. Sacred geometry. That's what they call it. Sacred mathematics or sacred geometry or something like that. So we banged into a pretty noticeable fog and bomb level there on the NASDAQ, bifurcation 2.618 level off of this wide bottom. And then off of the ABCD, this would have been our bot objective right into these levels. But sometimes bots can actually have alt harmonic levels. This would be alt ABCD 1.272. And then, of course, the golden ratio 1.618. This is a pretty darn important level in mathematics. So the point of the matter here is we had a 2.618 and a 1.618 tagged up there just recently on the NASDAQ. So not a big surprise that we get a bit of a pullback here. As well, I like to follow others on social media and stuff. Where should I show you this? And one gentleman in particular that I kind of like, he's a Southern gentleman. I always like working with Southern gentlemen. We've got one Southern gentleman on the site, Joe Z, and it's just such a pleasure talking to him. He's just such a Southern gentleman. It's so awesome. We also had a couple others. I remember we had another gentleman from Arkansas, and he moved down to Cuba, I think, or Puerto Rico or something like that. Anyway, James, I haven't seen him in a while. Anyway, this gentleman, and I kind of like, I'm like one of these guys that I don't really have like a love affair with one person or another. But if you're talking common sense, and I can tell you've got a few miles, hey, there's a fun picture of him. There you go. There's an image for you. I like listening to guys with heads on their shoulders. So this guy, Mike Jones, yeah, look at that, 61,000 subscribers. So obviously, pretty big social influencer guy. I think he had the market pretty well tapped there a week or two ago. Like I said, again, before I left, this was one image that he had on his video that I think really speaks well to sort of the me and my sacred geometry, and you don't really hear too many people talk about things like 2.618 and bifurcation and alt harmonic levels and the golden ratio and stuff like that. I mean, that's pretty esoteric. But this guy, he just simply said, we've got the QQQs now 20% above his really just keep it simple, stupid moving average, the 150-day moving average. And he just said in his video, when you see the market go this far beyond a simple moving average like 150-day, what usually happens following that event? The irony of it all is that quite often when the market gets up above 20% above this moving average, within, I guess, what's this number of sessions, you can see within somewhere between a week, 2 weeks to even a month out, you get a pretty sizable correction. So it doesn't surprise me that the market had to take a bit of a pause there. Also, too, remember, sell in May and walk away and Brian's birthday and all that kind of craziness. So this is a bit of a screwy market state anyways. Of course, the NASDAQ, it's gone off on the tilt here with the tech stocks and all that. If anything, that's a little bit concerning. ES would probably be a better sort of broader market measure. And you can see the broader market here was, I think this was FOMC, if I'm not mistaken, although I don't have the markers on here. Been thinking things like megaphones and just wondering, what would sort of a natural correction following this kind of event happen? And lo and behold, the interesting thing is when we work with David O on our Tuesday Stock Picker Club meeting, he loves hunting sort of the midpoint of the megaphone level. which to me, it really looks like it's this level right in here. So that is interesting. You can see it's just basically the midpoint as a correction point, sort of think of like first stop target, that kind of thing. And then also too, if we just use this recent range, now do you use these old highs? Do you use this low? Yeah, it's a tough one, but using just this low, just picking apart this range, notice reload zones back down in here. And of course, Brian loves his 88.6. And oh, gee whiz, you can see there's good old 200 period simple moving average off this 4-hour chart that's down here. So, as a day trader, I would just simply say, and I'll be doing this sort of first thing tomorrow morning. If I was hunting for levels to consider taking a trade, I've got my ATR script right here. It's a 61.8 mountain man level. You notice that we have horizontal support and resistance levels. So this was a resistance level on the way up. This is a support level on the way down. We're coming into a cluster of levels. There's ATR there. So, I wouldn't be surprised if there's some sort of backfilling. You could see Monday, Tuesday, got a bit of a room to move back up even into moving average resistance. But at the same time, too, really, I don't see any, if we do break through these lows, I doubt we're going to lose these lows too much in earnest. But if we do, then you can see next stop is all the way down here back to that sort of midpoint of the megaphone level. Probably also going to be some play against that level as well. So, I'll put it all together. The broader market is actually doing a fairly normal, healthy-ish correction. And I would even make the argument that we just had a big Fed event come up here. We also had the June options expiry, which is a huge institutional event, quadruple witching, if I'm not mistaken. So, the guys that unfortunately really manipulate these markets, and, anybody who tells you otherwise is full of horseshit. But this market is just as manipulated as Bitcoin, as any penny stock market. It's just these guys are really smart. And they've had since the Great Depression, which is basically 1930s, all of these sort of regulations and stuff to make sure that markets aren't being manipulated were put into place, especially in the 1940s. Guys like Jesse Livermore basically committed suicide because they took all the fun away from the markets and being able to manipulate them. And he actually took his own life in the early 1940s. Basically, the BlackRocks, all these kind of people, and I suppose we'll talk about BlackRock in a bit, but they basically have squirreled their way right back into the market. And of course, they don't even use the stock market itself. Hell, they don't even really use the futures markets. They use the options markets, which are unregulated, completely. SEC has no jurisdiction over the options market whatsoever. And they do most of their business through the options markets. And so they pay lip service to things like SEC and regulatory bodies. But at the end of the day, it's all a load of horse shit. This is just as manipulated as any stock or any crypto. It's all the same shit, just different pile. So really, and I would do yourself a favor and I would write down when you come into a monthly options expiry, and I do this month in, month out, week in, week out, just make note of where the heaviest open interest in the put options are, because that's the way the institutions manipulate the market. And sure enough, basically them bidding them up into this options expiry event, all the put options, and there's like tens of thousands, probably into like the billions, if not trillions of dollars. All of those put options expired worthless. Way to go. So anyway, not a big surprise that literally the moment that event happened and all of that money was just funneled right back into the 1%'s pockets, they let the stock market correct. What a big surprise. So business as usual. I really don't see anything out of the ordinary here. Also, too, the generally accepted idea is that stock markets will usually correct. Brian's birthday. Where's Brian's birthday? It's over here somewhere. Actually, way over here. So if anything, this market could easily come all the way right back into these levels. But Brian's birthday, sell in May and walk away. usually that seasonal window ends around the first week of July. So don't be surprised. I mean, I don't see any W's here yet. If anything, as a day trader, I'll be looking to just, swing trade, pivot trade, let's call it that, around horizontal support and resistance and that kind of stuff. But I don't even see any W's here. So here is that US holiday weekend. And the weird thing is that July 4th actually comes in on a Tuesday. So this is going to be a really screwy transition window. I wouldn't even be surprised if the transition actually doesn't come in until like after that event over there. And then also too, we probably should keep an eye on when the Fed's going to meet here in July. If I understand correctly, the Fed's actually meeting here over the not meeting, but Chappelle has got testimony in front of Congress, and of course the whole market will stop on a dime for all that. But I wouldn't be surprised if the next couple of weeks are still a little bit iffy here in the market, and lower highs and lower lows defines a bear. And then, the coup de grace to all of this, which I absolutely love. It's great to see that basically this indicator is working the way that I expected, is that actually the breadth of the market broke down there through that options expiry event. And now this is just fluff, and actually we're in pretty nasty correction mode here for the stock market. So the message was the broader market over the past week corrected some of its recent gains, showed you stock market through ES and NASDAQ. Breadth remains negative in the ES. This is the broader, biggest 500 companies in the US. And given the size of the move up, as well as the technical objectives achieved, I showed you the 2.618 and the golden ratio 1.618 levels there on the NASDAQ. That correction should not have been surprising. I also showed you that gentleman's YouTube video. Like him, subscribe, hit his buttons, whatever. I think he had it pretty well taped. The market just felt like it had just gone too far, too fast. So really that correction shouldn't have surprised anybody. And interestingly enough, and this actually probably is not a good sign for the sort of, people are worried about inflation. People are worried about, stability of the world. This market actually it's looking even more attractive than it was previously. So you all probably know, and I've got some old funny little trade notations. Not quite sure why I have those on there. It's weird how TradingView sort of shows you stuff, but then not other stuff. But anyway, oh, Jesus, I didn't even say anything. I hate how I do this. Anyway, I should probably, anyway, I started an hour late today, so it's going to be a short session here today. Sorry, everyone. So point of the matter here, natural gas, we should probably expect something like natural gas to move up to 50% levels. So somewhere up into the $5-6 area, let's call it that. Big old honking gap right up top there as well. And interestingly enough, I'm the type of guy that if we can get to at or below reload zones, then I don't have a problem getting bullish. Reload long zones, that is. So here we came all the way down to 88.6. So trade location, we can say reason number one, Brian likes to take trade, got trade location. Reason number two, you can see we've got like little RSI divs coming in here. We have a beautiful MACD div coming in here. We've got Willie nice and stupidly oversold. So the question ultimately is, if I buy this W here and I use the 50% level as a target, will I see at least a 2-to-1 risk reward? Well, that's a 5.5-to-1 risk reward. Holy for holies. And you can see this thing's already working. So up and away. Well, I guess we can go there, right? So 4.5-to-1 risk reward. Got to tell you, folks, that looks pretty damn bullish. Probably the one thing that I need to see for this thing to make me actually just turn outright bull is I'd like to see this thing run up and then consolidate a bit and get these moving averages to cross back bullish. As soon as that happens, then, oh boy, this thing's off to the races. We could also make an argument, something like, we call these It doesn't matter. Trendline breakout, whatever the hell you want to call it. I'd like to see a W on the other side of this trendline breakout. We might get like a nice little pop up into these levels here and a pullback, some sort of consolidation. Actually, we'll talk about this on the Bitcoin chart in a moment. This isn't really a buy signal into itself. I'd like to see a market structure signal now, but that's looking pretty damn attractive. And full disclosure, I went and bought a whack of this recently. Actually, I bought the UNG, the ETF. This crazy thing. Well, no, that's not it. I thought it was UNG. Stock, maybe. Oh, because it's an ETF, so they don't call it a stock. There it is. I bought that thing recently. So, and this actually looks like a really cool megaphone. 1, 2, 3, 1, 2, up. And we should come up in top here. So we'll see how we act. There's a bit of a gap up top here, and there's that 30 SMA. Point here is that, you know, I'm one of these type of guys that I like to, of course, go bottom fishing. And if I do come in here and I buy down in here and I'm looking to take profits up here, can I see a double on my money? I think so. And if it takes a couple of attempts to get that double, is it worth taking those shots? I think so. And the sad part about it, of course, is once we do get back up top here, that's when the public, of course, is going to get all interested in this. And I think they'd be a little bit late. Anyway, interesting on this UNG, if we use this market structure, that high to that high there, actually we are, if we break out through this high, that will be the W on the other side of the trend line. So interesting perspective. Point here is, if you are worried about inflation, this is the last thing in the world you want to see rallying. And then to add to that, I've been talking to you guys about how grain prices have been so weak. And actually, it's interesting. There's a bit of a scandal in Canada right now going on with grain price fixing, and how somebody seems to have been caught fixing the price of wheat in the marketplace. Of course, you know, don't get me started on substitute drama teachers. You know how I'm going to freak out about all that crap when I start talking about him. But it doesn't really surprise me in Castro economics that there's price fixing and gouging and shit going on. But the point of the matter here is wheat prices have moved up substantially here over the past, this is a weekly chart. So 1, 2, 3, 4 weeks. Literally, we were pointing down, started the week, then put in a hammer and just jackknife straight up. So the question ultimately here is, you know, are these grain prices going to start to take off? I suppose corn's still, you know, pretty substantial rally here in the short term, but still not turned in earnest. And then things like soybeans, soybeans still looking relatively attractive. So it's only wheat so far. But if you start to see those grain markets start to tick up, that'll be both energy and foodstuffs. And oh boy, here comes another big whack of inflationary pressure, which is probably one of the reasons why maybe the market needs to take a bit of a pause here. Well, we'll see how it goes. All right. So the point of the matter here is that I was speaking to the first part of our newsletter. Why is the market weak? I get the feeling that maybe we're seeing a little bit of commodity fear, especially with that natural gas turning back up. And then, of course, I've talked to you guys at length. When energy prices are moving higher, usually that means tech has to move lower. So it's not a big surprise that things like NASDAQ names and stuff were a bit weak here. While energy was correcting. Is this the start of a new bull market in things like wheat and natural gas? I don't think just yet. Like the moving averages, those weekly moving averages haven't turned up just yet. But I'll tell you, they're starting to look very interesting here. And as a trader, I always want to try and buy low and sell high. So both of those markets look very interesting to me. Anyway, so this next sort of conversation that we'll have here is really speaking to strong opinions loosely held. At the same time that the NASDAQ was kind of rolling over and tech was looking a little bit heavy and some of the commodities were starting to perk up and the stock market itself was looking heavy, all of a sudden out of nowhere, Bitcoin caught a bid. And actually, before I left on my vacation, I was working shorts and everything was fine. I think based on my most recent sort of public mention to you guys, and I even had it sort of here, specifically with regard to Bitcoin, I had my, hey, you can move your stop to scratch level hit on your shorts. Yay, woohoo! Which from a trader's perspective, is a big sigh of relief. And sure enough, this is exactly why you have rules like this in your trading plan, because you don't really want to see a winning trade turn into a losing trade. At some point, it's not a bad idea just to move your stop to scratch. And if the market comes back, and you never know how that, as I said to start off this broadcast, none of you, and I certainly, will never be right 100% of the time. Just get used to it, folks. So here is a great example where I was heading out on vacation. Everything was looking hunky-dory. And then all of a sudden, the goddamn market just turned on a dime and whoop, away you go. And you can see that this position got stopped. Actually, I had just assumed that I was going to get stopped at scratch, but I even had to book a small loss on the trade, which sucked, but that's the way it went. So it's just a trader's life, folks. Get used to it. Not really going to make any excuses. It's just the way the cookie crumbles, as they say. I was interested that the total market that we had, that one we did have very specific downside objectives that were actually hit, which I found interesting, right? Because, the Bitcoin market is stunningly resilient in here. I'm trying to find where the hell that total tweet was. I don't know where I put it. Was that? That's Bitcoin. Where the hell is it? Actually, I thought I had it in here though. Anyway, maybe I still have it over here. Let's see. Might have gotten rid of it. Yeah, there it is. So in this particular one, this is a really good example. The three-step setup on Bitcoin stopped you at scratch. Yeah, that's the way it goes. This is a really good example of one where you had your take profit at the 50% level, and actually it got hit. That was the 2-to-1 risk reward trade. This is the higher time frame one. Let's see if I can show you this. There's the 2-to-1 there. Oh yeah, because we had moved stop to scratch at that point on the remainder of the trade. So you're gonna work with me? Maybe I can just let's see what happens if I do this. Oh no, you're not gonna work. You knucklehead. Anyway, this original trade. Let's see. Maybe I can. What high is that? 1.20. This wasn't really a trade because you can't really trade this, but just as a good sort of illustration. Hell, I can't do it. Anyway, just take my word for it. This first one was 2-to-1. So at 2-to-1s, 50% levels, you take partial profits, move your stop to scratch on the remaining, and the remaining got blown out at scratch. So that's a very typical sort of trader's kind of trade there. Not a big surprise. I actually left this on the screen when I reviewed this 2 days ago when I came back, just to show you that this is what I was anticipating what was going to happen. And this is what actually did happen. And that's just a trader's life, folks. If anything, this is why I always say to you guys, let's not get into the business of predicting what's going to happen. Just trade your setups. And in this particular case, had I followed the setups, done everything according to the book, would have taken half of the trade off at the initial profit objective. The other half would have just gotten stopped out at scratch, never did get to its objective. That's just the way it goes. I do find it interesting. Number one, I can't consider that a buy signal. I know everybody and their brother would say it is, but to me, old gnarly old timer, I can't consider that a buy signal. And same thing, unfortunately, with Bitcoin. Where's the best chart to show you? I can't consider that a buy signal, even though it was a hell of a trend line breakout. Boom. I mean, maybe there's a little bit of a consolidation off a lower time frame. Maybe you got a nice little W. Also, too, we did have a bunch of bullish divergence indications here. And then also, too, we actually had the algo actually spit out a buy signal here, which surprised the hell out of me. So I suppose there was money to be made there to go long. And congratulations to everybody on the site who did go long off that signal. That was such a killer signal. I got to tell you, And of course, what a terrible time to take a vacation, eh? Jesus H. Christ. But like on the newsletter, I show you, I'm not allowed to show you this on the website anymore. You have to subscribe to see it in real time. But you can see there was the turn, and oh boy, was it ever at one hell of a signal there. So, you know, what happened here? There wasn't any W's, and everything was working its way lower. And here is a really good example I teach in our education programs, and I've gone through this repeatedly in my career, that all it takes is one good fundamental driver, and it can quite literally break all of your TA. All right, what we teach in the education program is technical analysis works best. And if you want to write this down, this is a nice little free tidbit for you. Technical analysis works best in the absence of new fundamental drivers. And this week, folks, was a really, really good education in that, where the market was moving lower and everything looked like it was pointing lower. And then all of a sudden, some big penis comes into the market, starting wagging his tool around, and all hell can break loose. And what's fascinating, I mean, this is what I find incredibly fascinating about this. Of course, if you ever go listen to any of the talking heads on CNBC and all that kind of stuff, I was wondering, maybe I don't have it here. I've got the this little news aggregator. I have a feeling, though, I wiped it out. This is a different article. Anyway, I did notice that as soon as BlackRock officially put their sort of bid in to do an ETF, and keep in mind, all they did was they just applied. You don't even know. Mr. Gensler might come out and say, "Sorry, no dice." I doubt it, but you know that. The worst part about politicians these days. I mean, I haven't interacted with the audience yet, so let's see if you guys can read my mind. Something about politicians. How does it go? How can you tell when a politician is lying to you? And I believe Mr. Gensler, as basically a political crony in the SEC, I think he is basically now a politician. Thank you, Nuri. Nailed it. Way to go. So gums are bumping. All right, that's an interesting one. So the point of the matter here is now what I'm hearing is you go down and you listen to the CNBC guys, and they're all like, "Oh, maybe I'm wrong about Bitcoin." Give me a fucking break. And now you're gonna have Joey Diamond come out and go, "Oh well, Bitcoin maybe it isn't a fraud after all." Yeah, whatever. Oh, guy's such a jerk. So I mean. Point here is that you obviously had a major bombshell dropped in the market that BlackRock's heading into the Bitcoin ETF space. And if you go back and you listen to all of my public broadcasts before I left on break, what was the number one message I told all of you of why the SEC was going after Binance and going after Coinbase? What was the number one message I told you guys? Does anybody remember? Because I got to pat my own back here. If anything, that was exactly correct. Does anybody remember? I mean, I talk way too much. I mean, here I am blabbing away endlessly. But I specifically told all of you, everybody in the public, that I believe that all of that crap had to do with one thing and one thing only. Excellent, Matador. Good. One person's listening to me. Okay. Well, yeah, there was that's one way to put it, Eddie. All right. That's right. And I still think that is exactly what's going on here, folks. And I even said publicly, and I even put tweets out and stuff. Bitcoin and crypto and blockchain is going to be big. How big? Let's see if you guys are listening to me. How big did I say Bitcoin was and crypto was going to be. Let's see if anybody listens to me. I made a very specific reference. And if you work with me, if you've listened to me over the years, you know I often make references to this one particular show. I even gave you the hint there. Nah, no, well, okay, maybe, but I made a very specific reference. Nobody can remember? I'll give you a hint. Milhouse Van Houten? I think that's his name. No one? Nobody listened to me? Oh, boo. I said it's going to be big. It's going to be this big. Nobody listens to me. All right, that's a trivia question. Let's see if well, you could buy a hell of a lot of hookers and blow with that kind of money, right? No, nobody listened to me, eh? That's too bad. Anyway, go back and look at my old tweets and stuff. Anyway, so the point here is that I think this is incredibly manipulated. As I said before, I think that there you go. You got well. I give you the name Milhouse Van Houten, then you got to know it's Simpsons, right? I think that's what his name was, Van Houten or something. Anyway, and nothing about what I've said has changed here one bit. The special interests are definitely driving the bus here, and they will do things like I wouldn't even be surprised if that crazy guy in the White House, and geez, I'm almost nostalgic about Trump because at least Trump had he actually seemed like he wasn't senile. But anyway, the point of the matter here is I wouldn't even be surprised if there was some unholy alliance created where Mr. Biden basically called up Mr. Fink, there's a name for you, eh? And said, look, I'll make you a deal. You want to control this crypto space? Fine, I'll sick my dogs after your competition and I will drive them into the ground. But then at the same time, too, you got to dance with me. Because, you know, Mr. Biden, of course, is a career politician. That's the way politics works in our world. So, and then you might even argue that Mr. Biden's taking marching orders from other people. I don't think so. What I will say, I did find it really interesting is I noticed that Feinstein is awfully MIA these days. And the talk is that Pelosi is actually driving the bus. And that's half the reason why she sort of bowed out of the U.S. House is she has aspirations to take over Feinstein's seat in the Senate. So that's kind of an interesting sort of twist on politics. But anyway, so the point of the matter here is it's just typical U.S. politics, typical. So what I did notice, though, when I sort of went through all of the crypto charts is I didn't really see a hell of a lot of like new 52-week highs. And I saw a lot of crypto names, you know, like if we actually go through the crypto names themselves, and frankly speaking, I wouldn't be surprised if Bitcoin has to come off here a bit. Maybe we'll talk a little bit about that in a minute. But when I look at actually this SNX, I don't know who these guys are, but when I look at this is a pretty good example where you had these pretty substantial rallies, but are off of markets that were making new lows. Here's sort of my fun little old lady portfolio that I'm going to be running for this particular cycle and all my names. Suppose over the weeks and months ahead, we could talk a little bit about this kind of portfolio and approach and stuff. But, you know, like this is one that I recently bought on a dip against these lows here. Notice the market made new lows and we probably, yeah, okay, there's a daily chart. And then we are dead cat bouncing back up here. And I see this right across the board. Actually, Ren's probably not a good example. This is a good example, this LPT. Notice we puked out, new lows, dead cat bounce off the lows. H bar, actually H bar looks pretty darn good, I gotta tell you. Interesting, we get a nice little moving average cross there. And actually, you know, to be perfectly honest with you, this is perfect for my approach because like here's a really good example. Market tanks, absolutely puking out, and now, oh gee whiz, here comes some W starting to come back in. But no real new 52-week highs. EOS puked out to new lows. The LinkedIn, everybody was in love with this thing, including myself. You can see they went and washed the lows, put in a bottom, and then dead cat bounced straight up. If we look at this on a weekly basis, well, all that is just dead cat bounce right back into moving average resistance. So given that, I mean, hell, I bought a whack of this UBIC recently. Look at that crazy ass move. Actually, that's not the best one here. Look at that crazy ass move. Again, and this is a pretty typical name of like previous cycles. I bought a whole bunch of this down here. And I actually publicly said, and this actually doesn't even do it justice, but the old highs on this thing were like $8. And I suppose maybe that's what this high is here. And I said that if they actually take this cryptocurrency, and there's no reason why they wouldn't, Doge looked like exactly like this a few years ago, and they took Doge to new highs. Wicks and tails like to be eaten, candle body highs to trade location. But I publicly said that, and I this UBIC, I went and bought a whack of it, and for fun, they actually threw in an NFT for me. Thank you, Alex. Hugs and kisses. And I publicly said that if they take UBIC to new highs, I will dye my hair purple. And actually, look at that. I even have the little bit of the mustache going. Don't have a goatee on this NFT. Maybe I got to grow my hair in as a monobrow. But I'll dye my hair purple on this next run. And trust me, this will be Sedona Euphoria money to me. If they do run this thing up top here and take it to new highs, I'll be very, very impressed. But again, is this a new bull market? Has the bull market started here? Well, actually, they just took this thing to new weekly lows. And really, this is just a dead cat bounce. It's pretty sizable bounce, don't get me wrong. And obviously, there's some buyers that are motivated here. But, it's just a good example. Look at Doge, right? This is Allen himself. Why nobody has held Allen to account? He went on Saturday Night Live here. And, of course, all the damn shillers and stuff were going crazy to buy Bitcoin. Remember, or Doge, remember that Remy guy was making videos about Doge up here? Market absolutely collapses. And you can see we're right back down against the old lows, dead cat bounce. That's all that is right now. So, as I had said in the newsletter line here, I don't really see a new bull market yet. I know you guys all want to go, oh, no, this is a new bull. This is a new bull. We're going to the moon. We're going to the moon. I don't see it here yet. And in fact, as I said there with the stock market, usually what ends up happening is the market actually pivots about the second or third week of July. But I can see now that we've actually got the makings of a seasonal bottom here now. When it comes to something like Bitcoin, and if we just go back to the tweet, that's probably the best place to do this now. This seasonal window, Brian's birthday kicks in. Actually, I don't have it on here, but anyway, you can see roughly there's where it is. I guess we see it better on the daily chart. Yeah, there's the FUMC. There's the lunar eclipse, right? There's Brian's birthday. There's our seasonal week window. As I said, I don't actually have a buy signal here. This is a break of the trend line. And if anything, what you have to do is you have to wait for a W to come in now to actually get your buy signal. And if anything, I'm worried because all they did was they just ran it straight up. That's a V bottom, no doubt about it. On the BlackRock news, they ran all of the stops. Ding, 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 ding. Ran all of the liquidity pools, and then the damn thing just stalls. And could we use a bit of a period of backfilling? Remember, we said the seasonal window usually comes to an end around that first week of July. So could we use a little bit of a window here where the market pulls back and then consolidates? And then if I get 3 higher lows, then that's going to set up a bullish bot, which will be a bullish setup for me. But right now, if anything, the bothersome thing about this is because it was straight line up, what I'm worried about now is we might actually have a new short setup firing here. So I do find it kind of fascinating how, where the hell's the damn chart? I guess, was it, no. Darn Too many charts. Yeah, over here. So, here is that rally, and there's that crazy DI freaking algo buy signal. God damn, look at that, eh? And I even put a tweet out just before I left on break going, holy crap, what a sell signal. I mean, that was just spot on. And now the damn algo put in this buy signal and just took off like a rocket. So, hey, I got to be pleased that at least the algo is operating correctly. So that's cool. Of course, I can't trade when I'm on vacation. I'm not supposed to. I turned social media off. I turned the computers off. And I even looked at this, like Wednesday, Thursday, and I was kind of like, oh boy, look what the hell happened. But now look what's going on here. And actually, this is a really cool application. Somebody built this really cool tool of just pointing out divergences on the price chart. And you can see, of course, there were built bullish divergences developing down here. And of course, there's a big honking rally. Look at all the bearish divergences that are coming in now. Holy crap, there's 6 of them. And you can see MACD is my favorite sort of raw momentum indicator. And that thing looks like crap. And then if Willie is stupidly overbought, which it is, right? Yellow line's above -20. Then really, if I get any kind of M here, that's a short setup, but I got to get in on the short side. So I don't know what the hell is going to happen here. What I will say is from that low up to that high, there's the 50% rule. So this is exactly the opposite of what I was showing you guys earlier with that natural gas. I mean, hell, we can make the argument there's a double top. And if I'm a trader, strong opinions loosely held. I don't know what the hell's going to happen here. But as you can see, and actually this is interesting because if we go right off of the clothesline level of that double top, then you notice, oh, gee whiz, 2-to-1 risk reward. What a surprise. And I'm just eyeballing this. You can see it might even be even better numbers. But there it is. In fact, actually, that's a little fractal top there, a little shooting star. I wouldn't be surprised if a couple of shark traders are actually shorting that right there. So, was this a start of a new bull market? I don't think so. Was this hey, we got a big fundamental event. Let's run the stops and let's see if we can generate some liquidity. Absolutely, it sure smacks of that to me. And what I will say is this a? Man, I'm talking in circles. This would be a trade within the context, and I think this is important, within the context of an up-moving market. I don't mind the idea of hunting long setups here to take us another leg higher. And as you can see, 1.618 looks like that's actually what was just tagged there. So really, that shouldn't surprise us as sort of aficionados of things like ABCDs. Head and shoulders is, you can see 50% of just this particular range here, a little bit higher. So we might still have some gas in the tank. I don't know whether it happens on this move with all the divergences, and especially if that M comes in. And, let's call a spade a spade. If we look at this from like the daily perspective, where the hell's that? Back over here. Thank you, sir. There aren't any. Are there any questions? I don't think there are really any questions, are there today? All right, cool. Thanks, man. On a daily perspective, I still think this megaphone is still working, the bastards. So they went and ran all the stops on that event. As I said, I have to think that, I can get bullish. And keep in mind, strong opinions loosely held. I don't know what the hell's going to happen here. You can see there's a nice little inside bar, potential failure. This is now off the daily price charts. I was watching to see whether this inside bar would fire here, because that would have been right off of Brian's favorite fib. That actually would have been a pretty damn sexy short there, but it never came in. But notice now this inside bar is trying to fire here. And, as I had said there earlier, I don't really have a problem if we can make one low, 2 lows, 3 lows, and then I'll turn bullish. And if that can happen on the other side of the holiday weekend, even better. That would be totally awesome. So that's if I was thinking bull and I wanted to be bull, that's what that's what I would be thinking right now. Can't chase. You know, Brian's rule, don't chase, don't chase, don't chase. You're not allowed to chase that. If anything, I have to see a nice consolidation here. And then, you know, me, ideally, my personal temperament when it comes to trading, I like to see 3 higher lows to justify taking a trade. And let's just, you know, let's hypotheticalize. Oh, there's a word. I don't even know if that is a word or not. And let's say that we do, and keep in mind the bot setup, ideally it wants to see at least 33, but no more than 66, which is fine. So as you can see, this would basically be right into there. Let's say, hypotheticalizing, we do 50% retracement. That could happen. It wouldn't surprise me. So let's bump this up a little bit. So something like that. And I wouldn't even be surprised if you actually drilled into this lower time frames. I bet you there's like gaps in here that just need filling in. Somebody tell me how often gaps like to be filled in. I mean, look at that move. It was like straight up. So let's see if there's any gaps along here. Oh, I see one. Oh, I see two. And this is on stamp too, right? This isn't even a futures contract or anything. Oh, I see another one. There's a bunch of them in here. So there's one right here. Right there. Boosh, not filled in. And then I see one here. Not filled in. Ooh, that's a big one right there. There's a little bit, you can see the candle gap right there. But if I was like a bar chart guy, I actually do it from there because that's where that candle closed and then the next candle opened up way up there. So, oh, look, there's another juicy one right here. All right. So, you know, let's, I mean, I suppose we could go down to like a 10-second chart and see a ton of them, but where's all that? Oh, look at that. So boom, 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 all right around that 50% level. Could there be gaps down here? Probably. Wouldn't surprise me. Also, too, if this M does fire here, then that means that you can do things like fog bombs for the downside. So, boom. Hello. So there's some initial objectives. If we puke out, and really that makes sense, 2.618, we're just going to be coming into all these cluster of lows in here. And probably that lines up nicely with 38.2. So let's see. 38.2. Where the hell are you? 38.2. There you are. All right. So let's see where that is. 38.2. Oops, other side. Let's try that again. Hey, there you go. So could we see a nice little dump against these lows in here? Sure, that wouldn't surprise me. So just be forewarned. I mean, you can kind of see. It looks to me like things are getting a little bit tired here, right? You know, obviously follow your trading plan. You know, hell, I suppose if you were like micro time framing that, you would say, well, Brian, hey, you know, there is a big fat M already working from up here, and I'm short from that level right there. There's nothing wrong with that. I love M's and W's for trade setups. So if we did a fog bomb for this, let's see where the hell that takes us. Boom. Boom. There we go. Oh, look at that. 2.618. Right up against a BFF. So that's in against these lows. That would make sense. That actually makes a lot of sense. 4.669 takes us down into 38.2s and start filling in some of these gaps. So that makes sense. Somebody's saying that the profile also looks interesting here. Yeah, where's my profile? There we go. So just looking at, and really what I like to do with profile is I like to sort of identify a trading range. So that looks like a pretty usable trading range. Then I just ask, where's the distribution of the volume based on the range? So is that our lowest low? Kind of looks like it, eh? Something like that. Was that my vacation? Yeah, I think so. So, wicks and tails like to be eaten. That sure jumps out at me as a pretty significant event right there. I don't know what the hell this was, but clearly this is some sort of unfinished business down here. All you sharpshooter traders, I would definitely highlight that right there. And especially this candle body low. Wicks and tails like to be eaten. I would definitely highlight that. That to me looks like a very important level. But anyway, back to what I was just saying there a moment ago. If we look at the profile distribution, yeah, so this kind of makes sense. Oh, interesting. So you can kind of see if we go boobity boo. So there's the top end of the range, bottom end of the range, distribution of volume. 50% levels coming down into this node down in here. I would say actually this whole area, just keep in mind the profile wants to look like a parabola. So all of this needs filling in. There's sort of the POC to the downside. So that probably is a pretty significant support level. And it makes sense because there's a whole bunch of people that are probably long from here. So 50%, 4.669, notch in the profile. Probably if we threw up long-term moving averages, there's a lower time frame chart, so I don't know whether long-term is the right term to use, but let's see. Where is, yeah, probably gonna have to look at a bit of longer term. Yeah, there you go. So you can see, based on what I was just saying there a moment ago, off of the 4-hour chart, 200 SMA, and actually I do like this as well, because notice that this is also going to be the top of value. You can see where the profile shelf is right here. So clearly, if the market bangs down into this area, kind of like what I showed you there, bangs down into this shelf, all of these people that are long are going to be like, what are you doing? Get your butt out of there. So I wouldn't even be surprised if that's like a 6.1 or a 0.618 level in there as well. So having said that, yeah, be careful here, folks. As I had said in the tweet, higher time frame, we're still bullish. Problem here, though, is, I mean, again, the moving averages really haven't changed. This is just straight up. So support is actually still right back where we were a week ago. That would be awful if they just inside bars this and just cranked it right back down. But the market will do whatever it wants to do. If I can get that consolidation and 3 higher lows, then we've got the green light for a nice big fat rally, and there's probably a half decent long setup trade there. But for the time being, I just have to sit on my hands. And if I'm a lower time frame trader and I'm hunting setups, I got to think that, at the very least, we should do things like 50% retracements of this big, just straight line move up. And you can see inside bars are trying to fire there. And if I really drill in off the lower time frames, I actually have a short setup here that's trying to come in. So how ironic, eh? So probably over the next few days, don't be surprised if this M does fire that you hear Brian's in there hunting shorts. It's just what I do. So that's sort of your Bitcoin summary. Let's see, how did I do on that newsletter? I think I touched on everything. So we talked a little bit about the broader market correcting, wheat and natural gas pointing up, which means that I think commodity pressure, a la inflation. I get the impression that we just hit sort of like this is almost as good as it gets with regard to inflation. They see that Canada inflation's going right back up, and the central bankers had to start cranking rates back up again because things are getting out of control again here in Canada. The Fed came out, I think, a couple of weeks ago and said that they still anticipate a couple more Fed rate increases. And if that natural gas market starts taking off again, look out. I'm thinking that the crypto bull is a bit early, but I'll tell you, I did point out that, BCH here, I think is, it's so funny because, anybody who's new to crypto doesn't even know the BCH story, which is hilarious because this is, we used to call this B trash. But this is Roger Ver when Roger Ver freaked out and got all upset at God, crypto space. And I can't remember the guy who interviewed him, but he obviously wanted to fork Bitcoin. And this is the real Bitcoin, by the way. But you can see this thing just took off like a rocket here. But notice what letter of the alphabet is that? That's a W, right? And, if we look at this on a weekly basis and keep this as simple as possible, I found it interesting that, half of the reason why these coins are getting wiped out, of course, is that they're listed on exchanges that the U.S., of course, monopoly doesn't want Americans to be buying there. They want the monopoly wants the public buying the crypto from basically monopoly owned exchanges and sources and stuff like that. And these guys actually just announced in this past week that they listed on an exchange that Big Brother has officially deemed acceptable. And all of a sudden, all hell breaks loose here. And Eddie, you're in the call here with me. What do you think about that kind of volume, eh? That's some serious buying interest, eh? And also, too, what I really like, of course, as an old gnarly technician, is I love that big honking W. So this is the anecdotal evidence staring you right in the face. Like maybe we need to change this to a monthly chart. Let's put it on the 2-week chart. Look at that damn turn. And this is what, I said earlier, you can lead a horse to water, but you can't make it eat peanut butter, right? You all know the line. But if you're going to learn something from Brian, trying to make a positive difference in this world, 35 years experience in this game, this is what you're looking for. You're looking for a weekly W, and now this is like a 2-week chart. Hey, do we want to change this to a monthly chart? Let's see if we get a monthly W. Hey, look at that. There's a monthly W in there too. Hey, you can see what happened the last time the monthly W's came in. Woo! Now, I'm not saying, and actually we don't hear too much out of Roger Ver these days, eh? I don't even know if he's still around. I'm sure he is. But the point here is, one hell of an inside bar reversal signal there. Hey, if you had the balls to pull the trigger on that, you'd be laughing right now. But, the anecdotal evidence is there. It's staring you in the face. And now we can do things like reload zones. So just go RLZ and, oh, what a surprise. Notice here, 61.8 fibs, Mountain Man, is basically, if I change this to a clothesline, right, which is what the institutions like to look at, notice 61.8 is actually just basically right off of those levels. So, I don't know what kind of, what your 3 reasons are going to be to act in the marketplace. It's entirely up to you. You and your trading plan got to get you, you're welcome to join TRI. We will teach you the framework of how to run a small business of trading with the expectation of actually turning a profit. I know that sounds crazy, but that's what we do trading. Then once you learn how to basically frame your business, then we introduce you to the candy store. And the candy store is endless. We can come up with thousands of reasons to justify you actually acting in the marketplace. And of course, I think to try and set yourself up for the most success possible, you should try and frame 3 reasons to justify you acting in the marketplace. So can you see 3 reasons? And, we'll do just a quick pop quiz here. Let's see if anybody's listening to me still. What are the 3 reasons that I would like for you guys to concentrate on to try and set yourself up for success? Highest probability. How does that go? Can anybody even remember how that goes? And this is exactly what we teach in our education programs. It's not like we're reinventing the wheel here. The game of trading, excellent, Noreen. Fucking nailed it. Good for you. You are so awesome. I can reach through the internet, give you a big smooch. Mwah. There you go. Nice Matador. Oh, you guys are awesome. I think you're the only two listening to me over there on YouTube. All right. Nick's got it down to lick my what? What does that say? Lick my something. Scrotum? Is that what you're saying to me? Anyway. So the point here is, could you make the argument that, just well, maybe that was a good trade location, don't chase. Indicators going uber bullish, inside bars, double bottoms, anything to get long through here, and then woohoo, away she goes. Then that would be for sort of like the day, or probably like swing trader or something. Then, on a week, like, look at that chart, folks. That's ridiculous. So this little trend line was just drawn off of this recent peak, but I might even argue, you go like there to there, the original trend line off the top, that's long gone. Probably there to there. And probably this is probably the predominant trend line right now. Yeah, right there to there. So actually, I like this. So there's your predominant trend line right there. Notice we broke the trend line. Boom, right? And this is why you can't take this trade right on this break of this trend line here, because look at what it did. Rode down the damn trend line the other side. This is a good example of a nice little fractal inside bar reversal. If you had the balls to take that, way to go. But I might even argue, even just now, you have been given information that the market structurally is turning the corner. So now what you do, again, nothing changes. Notice how the reload zone prior was right in here. Well, now the reload zone, it hasn't moved a hell of a lot, is basically in there. And there's the original double bottom. So you can make the argument that this is now a shark setup that we would call on this site. So, but you're being given notice that the bear market is getting really old here. And anybody who's caught shorting and short here, well, you're kind of asking for trouble. Remember, I had those Bitcoin shorts and stuff like that. And that's the number one reason why you have things like move, stop to scratch rules built into your trading plan. Because we're down at the bottom end of the range. And if somebody sneezes, and that's exactly what I think's happened here, is somebody sneezes, and in this particular case, we're going to be listed on some sort of acceptable US exchange. Or, with Bitcoin, well, we got a big mutual fund manager coming in and wants to float a Bitcoin mutual fund. Off she goes. Like, they can just take off like a rocket. So, really good, just coming full circle. This is strong opinions, but when the market gives you this kind of information, if you were bearish before, you better have those strong opinions loosely held, because we are trying to turn the corner here, and don't get caught. I mean, somebody who is short off of this M top, let's say hypothetically, and you were like, you know what, I'm just going to leave my short on here because I think this thing's going to come back down. I know it's a piece of crap. You might just get your head handed to you, and in the newsletter, I had pointed out, and, Mr. Druckenmiller, and of course, for some reason, I have a major hard on for him lately. I have no idea why, but anyway, he's very, very smart guy. So you ought to all listen to him. But it's hilarious whenever he talks about shorting. He says, I can I can actually define my risk. If I go and buy something, I can actually define my risk. But if I short something, hell, I might lose 10 times the amount of money that I put into it if I'm caught going the wrong direction. And he's absolutely right. But notice where the 50% level is on this. It's all the way up here, folks. There you can see the W. I don't know whether this was a weekly or monthly chart that Chris and I put together, but I thought this was a really, really good anecdote of where we are in the cycle and what can happen very, very quickly. I mean, just like Bitcoin, we should at any given point in time expect 38.2 retracements. And Chris, did we have any questions in that Q&A document? All right, cool. So then we'll probably just finish off with this note. This chart I put together is a really, really good analogy of why I'm such a big fan of 38.2s. You know, in the education program, I like to call it the first stop target. And there was a gentleman who I used to work with now decades ago. Fuck, I can't believe it's that long ago. And he worked on the New York Stock Exchange. A guy by the name of Ray Burchett, who I actually teach you about in the education program. And he was a really, really big fan of 38.2s. And he was the one who really sort of drove it home to me, the significance of this particular fib. And the chart on the left is your weekly Bitcoin chart. And notice that every time we have a big rally up, the rule is you should expect a 38.2 retracement at any given point in time. Now, this move from here to here, we didn't get it, but notice this move from here to here, we did get it. We actually got it in spades. In fact, you could even make the argument that this thing actually came all the way back to the 50% level. And there it is, doink. You could also make the argument, and actually another student of mine who's gone on to great things, and I think he will be a huge influence in this space going forward. Colin, he actually was really a big fan of the idea of hunting that 38.2 fib down to the 50%. Don't call 50% a fib, though. You're going to piss off W.D. Gann in his grave. But he would call this area, in fact, actually, this is we even affectionately call it Colin's pump chaser zone. Where if you are a bull and you're hunting for bull entries, well, you use this zone, and I want to buy this pullback. I can't chase. I'm not allowed to go and buy that. But if we get a pullback into 38.2 to 50%, I want to get into super uber stalking mode here. So really good application of that concept there. Then notice we pushed to new highs. And again, at any given point in time, you should expect 38.2 retracements. Now, in this particular case, and you can see how long this took. Remember, this was Brian's birthday. This was sell in May and walk away, and seasonal peaks. And, you know, that Gensler guy, everybody had respect for him. I don't think anybody has any respect for him now. And of course, you know, the sad part about this, of course, is, you know, he probably was told, he was given specific instructions. You must shit on this space to get this price back down, because the higher ups want to float an ETF on this thing and they want the price down. Then they need all the kids' Bitcoins to get in, whatever the reason. Market comes down through that seasonal window, and there's our buddy 38.2 again, Mr. Ray Burchett. So if anything, this is just business as usual. There's really nothing new going on here at all. Was this a Colin pump chaser zone pullback? Maybe. It did do the 38.2. I will say though, you know, like I had said earlier, I was surprised, to be honest with you. You know, this is the total crypto market, same sort of thing. We were pressing the new lows, and then all of a sudden just jackknife straight up. And then of course Bitcoin, we were pressing lower, everything was just tanking. And then all of a sudden, out of nowhere, wow, in comes the bull. I mean, it's just the way markets go. You got to roll with the punches in this game. So there is your 38.2. It basically did exactly what it was supposed to do. So the irony of it all is that even now, what I would expect is I take my fib and I draw my 38.2. You want to call it Colin's pump chaser zone? All right, call it whatever you want. Ray, in fact, there was a guy on the site a long time ago who sort of took certain liberties. But anyway, the point of the matter here is he used to call this barbecue level Ray, because he didn't like saying Ray Burchett. I don't care what you call it, but just learn the significance of 38.2 retracements. I think it's pretty significant what happened here. But even now, what I would have to do is just simply drag my fib tool up. There is my Collins pump chaser zone. And frankly speaking, it wouldn't surprise me if, just because hell, I've seen everything in this damn business. It wouldn't surprise me if this is some sort of crazy ass head and shoulders event, something like that. And I don't know, maybe we do something like this and then resolve to the upside and keep going. And this becomes a midpoint consolidation. But, at any given point in time, we should still expect 38.2 retracements. Remember, we pointed out all the gaps down below. And I suppose you could make the argument from here to here. At the very least, remember I did the bot setup. We should expect 38.2s down to here. I mean, I won't talk about that on this higher time frame chart, but the point here is this could very easily be a head and shoulders top. Candle body lows for trade location. 38.2 is now off of this new high. Basically, market tags Collins zone, comes down, eats a little bit of this tail, and then turns back up. And there's a really nice little trade right in that window there for you. Could very easily happen. So, as I had said earlier, I'm not allowed to chase that. I can't buy that. No bloody way can I buy that. But we might get a nice consolidation and then a push higher, but I have to wait for that consolidation. The point here that I'm trying to make is that we just did a 38.2 pullback, just pushed to new highs. There's nothing really new going on here. And then if we come over to the higher time frame chart, well, my whole conversation there about 38.2s, well, we should have looked at this chart and said, well, Brian, if you're saying at any given point in time you should expect to see 38.2 retracements, then shouldn't we have been thinking that this market should come back up into what number is that? 35,000 at any given point in time? And the answer is yes. So how ironic. And of course, this is just everything opposite of all of sort of the pullbacks or buying opportunities. You can see candle body lows for trade location. Notice how that level right there, all the institutional players, they're watching that like a hawk. And that is the 38.2. And then if we think Collins pump chaser zone, in this case, it would be Collins dump chaser zone. So if we did that 38.2, 50% level, then really what that's saying is that we could very easily see Bitcoin rally up into this window right up here. Not surprising one bit. And then we throw on, well, isn't there like a moving average or something that you like to follow that that sort of kind of tells you whether this thing's a bull or a bear on a higher time frame? And that's this good old moving average system. So we'll take the higher time frame off just not to confuse you. Just keep it really simple. And that's still pointing up. So what I see here is this is actually what they call climbing the wall of worry. So, coming out of May, and then of course, as I showed you off of these charts, this seasonal window, and actually this is like 4 hours, so that's sort of like lower time frame trader. Let's go to the daily chart. Where's the daily chart? Oh, actually, this was the daily. No, I've got to mess that up now. Oh, well. Yeah, so off the daily chart here, you can see this is actually our July sort of coming out of this seasonal weakness window. If we did a little correction here over the next week or two and maybe put in 3 higher lows, got to see at least, in my opinion, I want to see at least a 33% correction, because if we don't get the 33% correction, we might still be trying to form some sort of top up here. And I just don't know. And frankly speaking, I don't think anybody does. But if we can do a 33% correction and then we start painting 3 higher lows, I love the idea of hunting some sort of long in here and, just eyeballing this. And I think this is what I was trying to do with you guys earlier. But just eyeballing this, and I think we'll leave the video at this, is if I take all this stuff off here now. And let's just hypotheticalize, right? That's what I was saying there earlier. Hypotheticalize that this is what the correction is going to look like. Then the bot setup says we want at least 33, but no more than 66. And then we want to clone that. And then we want to, let's assume that this is the extent of the correction, filling in these gaps, this funny little sort of pivot point right in here. Maybe the top of value, maybe we come down a little bit lower. I don't know. And then we do things like bot trades. Oh, interesting how the 25 entry level is actually going to be my old, this is where I could short this market. So isn't that fascinating? So, I mean, I don't know how this plays out. Maybe we go boom, boom, and then boom, 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 and that actually turns into an M off of that level. I've seen that happen lots in the past. But conversely, we're thinking bullish here because we're coming to the end of this seasonal correctional window. If we get the little pullback here, nice and healthy, clean up this overbought, clean up all the bear divs we saw off of things like lower timeframes, then we can actually start thinking about, okay, if this thing does go into uber bull mode through the summer, and usually the summer is pretty friendly for crypto. I mean, we'll see, only time will tell. Then what are we talking about for upside objectives? The bot itself would have 34,725 as a bot objective if we bottomed off of this particular level here. Right? I don't know. And then coming back to that higher time frame chart, we said that the 38.2 year is 36,000. So does that mean that maybe, there is 34.7, there's 36.5. Could we do some sort of fun pop into there through the summer months? Maybe, through August or whatever, something along those lines, which would be very typical for Bitcoin, would not be out of the ordinary whatsoever. And of course, the reason why I like this kind of thinking is, first off, I think, things like Mr. Ver are going to have to take a little bit of a pause here, right? You can already start to see the consolidation happening. You could hunt a bullish bot set up off of this, same logic. Want to see at least 33, but no more than 66. So that would be something like there to there, and then there to there. So we're almost at 33, a little bit further. That could easily happen overnight. Then if we do get that correction, let's maybe assume we go 50%, then that would take us up into here. And if we think bot price objectives, right, that's up into this area up here. So what that means is, I don't think there's a huge hurry. Over the next couple of weeks, can we get some sort of consolidation and turn back up? Absolutely. That wouldn't surprise me one bit. And then we have our nice little friendly seasonal window for crypto and alts and stuff to rally through the latter part of the summer. Absolutely. Makes perfect sense to me. And, there are some names in here that just look so cool. Where was actually, I think we just, one that I really love here right now, but I don't want the guy to get a big swollen head, and I know he will. But one name that I'm really liking, although I don't know where I have it. This one right here. Look at that chart. Look at that. That's exact. And that's the irony of all of this, right? And this is what I'll leave. Oh, geez, I got to get out of here. So yeah, I'm going to leave you on this now. You can see the double bottom, right? And this is the same thing as BCH. You can see the huge pop that confirms this massive weekly, maybe even monthly double bottom. You can see the sell-off right back against all these lows. Now, if I were you, and obviously do your own due diligence, do your research. Don't go and buy something just because somebody on the interneting says they like it, no matter who the hell they are. You have to have your reasons. That's the whole reason why we did the school program, is I don't want robots. Robots are useless. I want people that have got heads on their shoulders working with me, that they can come up with the realistic reasons to justify them acting. But I mean, just look at this chart, and actually this, well, I guess that's fine. it's 40, $50. And here we are at $6. So could this thing rally a little bit from here? I think so. And I'm not necessarily, I mean, if we can get some sort of nice W to form down in here, I'm definitely going to go add to this position down in this area. And this is exactly what I want to see to justify actually, getting ready for that summer rally. That's a beautiful looking chart. Hasn't quite W'd out just yet, but it's pretty damn close. And if this thing does W out on volume, oh boy, look out. All hell is going to break loose there. And it's interesting too, because somebody that I had made reference to earlier put out a tweet just basically drawing some very simple lines, something along these lines. It's probably not accurate, but something along these lines. And he's like, I'm in here accumulating this one. And I said, the only response I gave was, descending wedges are inherently what? Can you answer that question? Or maybe that's sort of like fill in the blank. Thank you, Eddie. I missed you, man. Hey, for whatever it's worth, oh goodness, look at what Josh just posted in the lounge. That's funny. Robots are useless. What I really want is a whole bunch of educated traders. And actually, it's funny because it's ironic because she was a total robot. I mean, she was absolutely in love with the guy. In fact, I think she even got married to a guy who actually got really angry at me because I wouldn't shill his stable coin idea at TRI. And I think they got like wiped out in crypto, which is so sad because how ironic in that image, there's a robot right there. She never learned how to be a trader. All she wanted to do was be told what to buy and what to sell. So how ironic that you post that there, Josh. Anyway. So if you can answer that question, in fact, I'll even, I'll show you the tweet. I don't know, it's not that big of a deal, but just to show that, I'm not bullshitting you guys. How do you do the replies on this thing? I think it's this. So there was the comment, up there, where there. Descending wedges are inherently what? So I found that fascinating. And I really, I definitely think Colin is definitely somebody worth following. I mean, I suppose I can give myself a shill here. Maybe follow, like, subscribe on the Twitter thing. Although I'm not overly impressed with now this is basically this social media platform has become monopolized and controlled and basically dominated by one person, which of course I don't like. But anyway, it is what it is. So, but I definitely think Colin is a very, very intelligent gentleman, and he's going to make a lot of money in this world. And I think it's important that you understand that you put into context where we are, not only in this cycle, the 4-year cycles, but also too just on the price chart. I mean, is it a good idea to come in and short something like that after it's been through? Like, this is where all the public gets absolutely destroyed. But now that it's sat here at the bottom end of its range for like a year and a half and done absolutely nothing, is this the place to get overly bearish? I don't think so. So in conclusion, strong opinions, lightly held. Absolutely, you have to have that as a trader. You have to trade your setups. You have to make damn sure that in your setups, especially if you have a trade that is working, that you try not to let a trade that is working actually turn into like a losing trade. That's like a potion for disaster in this space. If it means things like taking partial profits and then getting stopped out on the remaining at scratch, if it means getting completely stopped out of your position at scratch because the market just came back against you, you don't want to let this kind of trade happen. That's why you move your stop to scratch at benchmark levels. Strong opinions, that's fine. Loosely held. If the market's telling you something else, don't fall in love with anything. And then finally, gotta say, this is the time. I mean, I don't really like the idea of chasing something like a Bitcoin up top here. And what I've told people, and it's the same message that I say all the time, it's the same message that I say to my business partners. If I'm going to buy something, then I got to draw my reload zones. I have to, or, if I'm going to trade something, fine. Got to get a consolidation, 3 higher lows, great, fine. Got to identify exactly where I'm going to go long. Got to identify my stops and, of course, obey risk management. If I want to invest longer term, higher time frame, then I got to reload zone it. And even now, you can see this is my reload zone. And I can only seriously come to Bitcoin as an investor now if I'm at or below these reload zones. Kind of sucks. If we do consolidate here and then we do put in some sort of W, I'm going to consider it a trade heading into sort of midsummer seasonal peaking time period. Still think a lot of these medium-term price objectives are still floating out there, and they probably should be hit before we're done. I can't tell whether we're going to go straight up here or whether we need to pull back. But what I would just simply say is I'm not allowed to chase, and there's no way in hell I can buy that right there. So slow and steady wins the race. Until these moving averages actually do cross back bearish, I can't turn overtly bearish of Bitcoin. I still have to say that things like pullbacks are buying opportunities. Yeah, I think that's my message for the day. Sure hope you enjoyed that. I'm 15 minutes late for Liam, so I got to get the hell out of here. Have yourselves a great day. I suppose we'll pick up, maybe we'll do an after party show tomorrow, because I do like to review the algorithm and any signals that were generated through the weekend in that after party show on Mondays. And I have to say, the algo is actually, it's even impressing me, to be honest with you. I'm so stunned at how it's actually nailing these Bitcoin pivots. Slow and steady wins a race. I mean, if you are an algo trader, I'm not quite sure what screen to end off on. We'll just end off here. If you are an algo trader, then you just got to take it slowly. The problem there, though, is you have to be able to act when the damn algo signal comes in. And that sometimes is easier said than done. And especially this past week, if you are an algo trader, there's no such thing as a vacation, is there? Jerks. So it is what it is. I think probably for a lot of new people to trading, I think probably the best, until Stuart actually has the automated algo system up and running and you can just follow along. He is working feverishly on this, and I hope it comes in pretty soon. Great, and we're going to try and build an algo that does take all of these trades. I've tried to do it manually, and I've missed a couple trades now, which kind of irks me, but it is what it is. And it just goes to show how difficult algo trading is to do it manually. But if nothing else, this is an excellent sort of keep you honest gauge. If this thing's pointing up after being in an oversold zone, then being short and being bearish is probably not a good idea. When this thing was back overbought and flashing sells, that's when you probably should have been thinking bearish. And of course, like I said, these two signals were just ridiculous of late. Okay, I think I'll leave the rant at that. Slow and steady wins the race. I think you use Bcash, Btrash, Roger Ver, whatever the hell you want to call him, as another anecdote of where we are in the broader crypto cycle. So, why am I loading up on the little old lady portfolio and all of that kind of fun stuff? Well, it's because these charts are looking like this. And, I don't know. I don't think I showed you guys, and I got to stop talking. But I had one that actually we did load up on here recently. and the damn thing just went absolutely nuts. I mean, it was only like one of these 1 or 2 day rallies, so it wasn't really anything dramatic. But it just goes to show how quickly these damn markets can turn. And if you are a little old lady, you better be sharp. And you better step in and buy when you're supposed to step in. Because look what can happen. I mean, somebody told me that they just cleaned out the order book on this thing, but look at this. Right, this is how quickly this stuff can just go crazy like this. So, caveat emptor, buyer beware. And like I told you earlier, I actually fully expect that they're going to trade this thing back up to new highs some point down the road. And at that point, you get to see Brian dye his hair purple on social media. That'll be fun, eh? All right, everybody. Have yourselves a great day. PMA for the win. Thanks for the best of luck and best wishes for Liam. If you like the video, please hit the like button, subscribe, ring the bell when we're notified of the next video offering. And, I've said this repeatedly in the past, the absolute best thing you can possibly do for TRI is just simply tell a friend. If you think there's some value in this, maybe they might think there's some value in watching this free video too. All right, everybody, all the best, hugs and kisses, PMA for the win, and bye for now.